All right. Welcome back to Build Your Legacy Insurance Edition podcast. What's going on, Travis?
Hey, Bill. Happy New Year, man. How are you?
I'm good, man. You have a good one?
I can't complain. I'm here, right? That's the most important part of it.
That's right. Hey, and both the Panthers and the Bears are playing in January.
I was going to say playoff bound, right? And division champs, right? First time.
I
first
guess we
time
can claim that.
Yeah, first time in a long time for both of us. So, I mean, hey, we're playing with house money the rest of the way.
Yeah. Y'all's record was certainly a whole lot better than ours.
Well,
but you know what? Like you said, we get a home game as well.
Yeah, well, I mean, that NFC South is tough. I mean, that's got to be one of the toughest divisions in football.
Sure. We'll take that comment for the year.
There we go. It is nice to be relevant again.
Yeah, that it is. So, hey, you sent something, and like we talked about before, we're outlooking here for pro football. Let's take an outlook of the insurance business.
Yeah, let's do some prognosticating. Isn't that what they call it? So, yeah, I thought it'd be good to sort of jump on here beginning of the year, right, and talk about the market outlook. I think, through conversations with all of our strategic partner companies, we're starting to see some really good things and wanted to sort of break that down a little bit. I think with where the market's been, we're seeing it stabilize, right? The hard market stabilized. I don't think that means it's a soft market by any means.
No, Travis, I agree. I don't think it's going to be a soft market yet either, man.
Just because things are starting to trend in the right direction, it's not going to go back to where it was. But I also think it's important for agents to understand that, hey, with this stabilization, the days of getting your growth through rate increases are dwindling.
Hey, to your point, I think a lot of carriers now are looking at the PIF growth. I think we may have talked about that before as well, but they're really starting to judge a little bit more so, and I don't say judge because that's not what they're doing, but grade and look at agents based on PIF growth, not just based on the premium.
Yes. Yeah, I agree. And I think it's one of those where, these carriers, as the market is softening, stabilizing, there's confidence in the reinsurance market. They're looking for growth. They're looking for the partners that are aligned with them for smart growth, right? Because there still are regional challenges. There still are some challenges out there in the auto segment, those types of things, but they're looking for those agents that are looking for smart growth and aligned with them to achieve their goals as far as ideal clients and things of that nature.
Yeah, and I think there's a lot of things that are driving that, right? I think a lot of these carriers, and certainly we don't see all their numbers, but I do believe all these carriers are getting bigger and bigger with the different partners. There's a lot of national partners out there that are providing big volumes like SIAA and SIA North Carolina, but there's also this whole private equity world and, this venture capital money or private equity money that's coming into this space that's making a lot of acquisitions, which is providing a lot of premium. And I don't know their numbers either, but it could be one of those that they are growing based on acquisition, maybe not growing based off of generating new business. Yeah. And so, maybe this is something that we're all seeing just with the shifts that are happening. And, it's just the world that we're in today.
Yeah. And I think that puts the independent agent in the position where it's not going to be a game in this year of, volume as far as quote flow, right? What they're going to look for are the right submissions, the clean risk, I'd call it almost broken down by zip code for penetration and growth. And so those agents that are, I'd say doing the right things, have the right metrics in place, using the right limits, that is what's going to win the day for the independent agent. And that's what's going to help, strengthen those carrier relationships. If you're looking for that transactional relationship with a carrier, I think that is going to be a struggle for a lot of independents.
Yeah, and I think you're right. And, you talked about the zip codes and the specific things, but I think we go back, and one of the things we've talked about is whether it's telematics, there's always things that carriers want. They get so much data. These actuaries are pulling all this data in to figuring out what they need. And what does 2026 hold for us? Well, some of it we don't know. Right. Maybe we'll say we don't know. But some of it are some things where we've seen some carriers put things on there with telematics. They know what's going on with the auto stuff. The rooftops have been a big deal. Let's say that.
Yeah.
And I think they're going to continue to be a big deal. We've seen a carrier look at it where they're taking the snapshot from the sky basically to look at the tree overhang and things of that. So not only are we going to age a roof, but we're going to what's around you and what does that make your risk look like? So I think there's a lot of things there that we are going to see, that we have so much data now, because they've always had data.
Yep.
But now you add maybe the AI data or just the ease of doing it.
They can utilize it better.
It's going to change the underwriting factor, so to speak, in 2026.
Yeah, and I think the best way to put it is, some of that stuff like the telematics, a leak detection system, partnering and securing your risk as the consumer with that carrier, that stuff's no longer optional, is the best way to put it, right?
Everything's gotten so expensive, when it comes to whether it's inflation, we call it, whether it's the interest rates, it is more expensive to put that 2x4 back in the house, the sheetrock and the labor and everything that goes into this. So we as consumers, and certainly us as agents, have to help our consumers understand we got to protect our risk better, because a small loss isn't a small loss anymore.
That I think that's hit the nail on the head, right? I can tell stories of having that exact conversation with people about, go to Lowe's, look at the cost of that 2x4 today. It's not what it was 4 or 5 years ago. And
or the bumpers on the car now with all those sensors.
Technology, right, has changed the game. And, then you add in some of the different, legal issues we're seeing across the country, and it just adds a different dynamic to the industry as a whole that these carriers are trying to account for. And they're putting the responsibility on the agents to be able to help, I'd say, share that message, educate those clients, and really sift out who is a partner in securing the risk and who's not. And I think that's the key for the growth this year, which is going to be looked at very closely by carriers because they want to see it.
We talk about what this is in 2026, right? You say, okay, what is this outlook? I think the outlook for 2026 is the basic principles of what they should have always been and what they always hopefully will be. It is have agents underwrite the risk, there in person, because the carriers now can do a better job of doing it digitally, AI, whatever you have it. But it still goes back to the core principle of that. And also for stock companies or mutual companies, it doesn't matter what they are, carriers need to see growth.
Yes.
So it goes back to your point, Travis, of organic growth has got to be there, and agents that are doing the right things for helping minimize the risk for their insureds and using the programs and platforms that the carriers provide in the digital space, or maybe the outside resources that can be done, like you said, with leak prevention. They're just going to get right back to the basic principles of, hey, let's ensure good risk.
Yeah. The name of the game, right? Let's ensure good risk. And, I think from our perspective, as agents, it is, I've been going around having conversations with agencies for 10 plus years now. And for the last 2 years, one of the big themes with existing agencies has been, hey, we're holding on for dear life because of the rate increases and the changes in underwriting and the challenges that the industry's faced. Well, now that these companies they're not turning the fire hose on, right? They're turning the spigot on. They're looking for that growth. Now's the time. You can't continue to sit on the sidelines and just take care of what you have, right? You've got to find that balance. You've got to find that organic growth, to continue to strengthen those partnerships. And that's really, from my seat, the story I want to tell to those agents is, now's the time. If you don't have a plan already, you need to put one in place. If you're not investing in your team, if you're not investing in that new business opportunity, you're going to find yourself getting squeezed by your partners when it comes to potentially representation, but definitely compensation, right? We're starting to see more and more that these carriers, they're going to reward you more for organic growth. It's going to factor into your overall compensation, and you've got to continue to grow to be able to earn the contingencies and bonuses, that are out there to you, right?
Yeah, and be that risk manager. You go back to things. Don't be the agent that's focused on price. If you're the agent focused on price and don't help your insureds become a better risk, because not everybody's going to be a phenomenal risk.
Right.
It doesn't mean they can't get there.
Right. You can matriculate them up to where they need to be.
That's right. And if you're not doing that from a risk management standpoint, whether it's on commercial lines or personal lines, then you're fighting an uphill battle with the carriers as we move forward 2026 and on.
Well, and at that point, you're just quoting and praying, and you and I both know that that's not a long-term recipe for success, right? And I think that's the true thing is the risk manager, the risk advisor is going to help you differentiate yourself to your consumers. It's going to help you secure better risk. It's going to help you have better clients, longer relationships, and more importantly, it's going to help you write new business. It's going to help you generate more income, which is what we're in the business of doing.
Absolutely. So it goes back to, I personally don't think 2026 is going to be earth-shattering, except it's getting back to the right principles that we should have been looking at the entire time.
I completely agree, right? We're, like I said, we're starting to see the good signs, right? We're starting to see the faucet steadily drip and turn back on. And now's the time to really take it to the next level as an agency to continue your growth.
Yeah, absolutely. Well, glad we could do this. Hate that we're not in person, but maybe the next one we'll jump on in person, and maybe we'll wear our maybe the Panthers and the Bears be playing each other soon.
Listen, I would say my son got me a Caleb Williams jersey for Christmas this year. I'm dying to put that thing on for a podcast.
So there you go. Well, maybe I can be wearing the Panthers jersey as well.
There we go, man. Well, look, best of luck in the playoffs, and I'll see you here soon. Okay.
All right. See you, man.
See you.
Thanks for tuning in. You can catch our Build Your Legacy Insurance Edition podcast on YouTube, Apple Podcasts, Amazon Music, Spotify, or wherever you get your podcast. Be sure to subscribe, leave us a review, or send us over a topic recommendation at podcast@siaofnc.com. If you're interested in learning more about what we do, visit us online at www.siaofnc.com. We hope you enjoyed our newest episode. See you next week.